Hey everyone, welcome back to Corporate Decoder. Today we are diving into Lincoln Educational Services Corporation's latest report, and trust me, it's more than just textbooks and classrooms. We have some interesting stuff regarding how they make money. We will find out if they are top of the class or detention worthy. Lincoln Educational Services Corporation just dropped their financial results for the last year, focusing on the fourth quarter. This report gives investors a peek into how the company performed and what their plans are for the future. Are they making money, or is this report a final exam they're about to fail? Let's find out. This report is for the year that ended December 31, 2024. Basically, we're looking at how Lincoln Educational Services performed during that time. Did they ace their goals, or are they struggling to keep up? The company put out a press release to announce how they did financially for the fourth quarter and the entire year. This is their way of telling the world, here's how our business is doing. This press release is attached to this report. Now, there's a bit of legal language here. Basically, the company is saying that while they're sharing this information, it's not officially filed in the same way as some other documents. It's like sharing notes but not signing a contract just yet. Here's where things get interesting. This section tells us that there are some financial statements and exhibits attached to the report. These attachments are like the supporting evidence for the company's claims about its performance. We are going to look at them. Let's jump into that press release. This is where Lincoln Educational Services really lays out the details of how they performed financially. It's their chance to shine or to explain any bumps in the road. This press release announces the fourth quarter and year-end financial results. Okay, diving into the numbers, their total revenue for the fourth quarter was $89.2 million. That's a 7.1% increase compared to last year. This means they're making more money from their operations. The company's net income, which is the profit after all expenses are paid, reached $3.5 million. That is a big jump from the $2.1 million they made the previous year. Higher profits often make investors happy. Adjusted EBITDA, a measure of a company's operating performance, came in at $12.5 million. Again, that's up from the previous year. It suggests they are becoming better at controlling costs and generating profit from their core business. For the full year, the total revenue increased by over 10% to reach $352.3 million. So across the entire year, they did really well. For the full year, net income rose to $14.9 million, more money in their pocket after expenses. That's always a good sign. Again, for the entire year, their adjusted EBITDA jumped to $47.3 million, showing improved operational efficiency throughout the whole year. Their average student population rose by 4%. More students means potentially more tuition money coming in, impacting their revenue positively. New student enrollment increased by 5.5% for the year. This shows that more students are choosing Lincoln Educational Services. This bodes well for future revenue. The CEO said that their strong financial performance reflects their focus on managing costs and the ongoing strong demand for their career-oriented programs. Basically, he is saying they are keeping expenses down while more people want to enroll in their schools. Looking ahead, the company plans to invest more money in their programs and campuses. They want to take their existing business and invest into it to make it better. The company expects their total revenue to be between $365 million and $375 million for the upcoming year. This suggests they are pretty confident about their continued growth. They are also expecting their adjusted EBITDA to be between $49 million and $51 million. They are setting goals to manage their finances. So what do we make of all this? Well, Lincoln Educational Services seems to be doing pretty well. Their revenue and profits are up and they're attracting more students. They're also planning to invest in their programs and campuses, which could help them grow even more in the future. Now, let's put on our corporate decoder hats and give our take on this report. Lincoln Educational Services appears to be on a solid path. Their ability to grow revenue and income shows they are meeting the market's needs effectively. By investing in their campuses and programs, they're setting the stage for continued success. Their financial health seems robust. A concern for the company is making sure they keep up with changes in what students want and the job market. In conclusion, Lincoln Educational Services is showing a positive trajectory and their financial performance is robust. They have demonstrated consistent growth and are strategically planning for the future. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more corporate decoder deep dives.